I just bought $100 worth of 5 different dividend-paying stocks in my 6-figure stock portfolio. Each of these companies/ETFs pay dividends, which only boost the amount of passive income that I make every single month. The first company I bought was Realty Income. This is a great solution for investors who want to get exposure to real estate without all the headache and work of being an actual landlord. Is able to pay a starting yield of 5% in monthly dividends. There are over 11,400 properties that they own around the world, which are under contractual agreements. This includes convenience stores, restaurants, gyms, grocery stores, which has continually boasted at a 99% level of occupancy, meaning rent checks are going to keep on coming in. has paid consecutive dividends for 627 straight months with no interruptions or dividend cuts. Now that's really reliable. I now own 35.17 shares of and get paid $104.69 every year for doing absolutely nothing. I made sure to continue buying into the fan favorite JEPI this past week as well. This fantastic ETF continues to provide around a 10% dividend yield every single month. JEPI owns 123 different dividend-paying stocks across various sectors to give a very well-balanced portfolio that has shown to be less volatile than the overall market and has actually outperformed the market in 2022. JEPI also does options trading for us, which allows investors to get exposure to the rewards of covered calls without having to put in all the work. I now own 35.30 shares of JEPI, bringing in about $204 every single year. Surely everything in the air tonight was not all high-yielding dividend stocks. I bought into the triple Qs, QQQ. This is a wonderful ETF that gives exposure to the 100 largest companies in the NASDAQ, which is known for its innovative technology companies. I'm talking companies like Apple, Microsoft, Amazon, Tesla, Google, Nvidia, even Pepsi and Costco. They're among the fund's top 10 largest positions. Exposure to the triple Qs means one is investing into future tech that will run the world one day, such as augmented reality, cloud computing, big data, mobile payments, streaming services, and electric vehicles. I can't wait for the growth that will one day happen with my 21 triple Q shares netting me $41.43 every year. I wanted another stock with a 5% starting yield, so I invested another $100 into Prudential Financial. This is a financial company that's been around since 1875 and has over $1.7 billion in assets under management. The company helps individuals and companies with retirement planning and offers several insurance products such as life insurance. Prudential is now trading well below its 200-day moving average of $104. Are people still going to be contributing to their retirement accounts during a recession? Most likely yes, because they're too lazy to turn off the feature, but they will continue to pay for life insurance policies regardless. This is a global company with 50 million customers in 40 different countries. I now own 14.2 shares for just under $70 every year. Last but not least, I also bought the hardware giant Lowe's. Lowe's is a dividend king with over 50 years of increased dividend payments. In fact, ever since the company went public in 1961, they have paid a dividend. That's as reliable as it gets. A little inflation and a little Uncle Joey, that doesn't scare Lowe's, though it might scare the rest of us. Lowe's should continue to benefit over the US's serious housing shortage, as well as any time people renovate or continue to build new homes. That's more money that's being spent at Lowe's, with their over 2,200 stores in the US and Canada. Don't let Lowe's low starting yield of 2% fool you. This is a company that aggressively raises their dividend. 23% is their CAGR in the last 3 years. 10 years ago, this company was paying just 16 cents a share per quarter, and now that number is up to $1.05. Lowe's is one of the newer positions in my portfolio at 7.6 shares, bringing me $32 every year and growing. I'd love to hear what stocks you're buying in this market pullback. Honestly, this is a great time to be a dividend investor. You get to invest in stocks at a discount and at a higher starting yield. Now, these videos, they take me forever to put together and research, so make sure you hit that like button and are subscribed. My videos are always found in podcast form under the Collect Cash podcast name, and I'll catch you on the next one.